Hello everyone, it's Khaled. Welcome to today's daily pitch, 10 of March 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. So we will start with our economic calendar to see what do we have as pre-planned economic events. Then we would go and analyze the dollar index, gold, and oil. These are the most volatile currently. We will have a look at equities as well. Looking at the economic calendar, we can see that we do not have much important economic data during the day. We had some GDP numbers for Japan, which came higher than expected. We had some numbers for China as well. And moving on during the day, the NYSE session, it's relatively calm. That's in terms of economic data. In general, what's currently moving the markets more is the headlines and the geopolitical tensions taking place in the Middle East. Having a look at the general market sentiment, we can see that the dollar index is currently, after it reached the 99.5, it's facing some hard time or rejection to break any higher. As for the treasury yields, after the yields bumped from the 4% up to the 4.2%, and the main reason for this is that oil prices are moving up and the expectations of inflation is back. Regarding the VIX or the fear index, bouncing up, it reached around 30, 29, 30, and currently moving down since although the war is still ongoing, but there is no new major escalations. Also, yesterday, the US president gave a couple of comments that we can see he believes that the war will be over. But of course, that's not for sure as well. But this gave some relief to the markets. That's why we are seeing currently VIX, it's dropping. Moving on, as we said, that's the dollar index. After the dollar index gained some strength due to the safe haven appeal for it. In addition to that, expectations that oil prices are up. So if the expectations that inflation will go up, dollar gained some strength. The dollar index failed to break above the 99.6. We can see 2 times it rejected and currently it's moving down. So we will see, of course, during this week, we have some economic data. Tomorrow we have the CPI in the US, the inflation data. It's very important. And keeping in mind regarding the dollar index that last week we had the non-farm payroll and unemployment rate numbers, which were worse than expected. And this will give some weakness to the US dollar. So let's move on right now to oil and see what is happening with oil. Of course, oil and the Middle East tensions, it is very volatile. I'm going to zoom into the 30-minute time frame. The last analysis on oil, we were here. We said that we have 2 scenarios. We either retest and move up or we break this level. We actually broke this level and printed the new all-time high, not the new all-time high, new higher high. And as well, the market gap was really big due to the tensions that took place in the Middle East. Let's delete these and see what are the possible scenarios we could have. In general, oil prices are volatile too much due to the closure of the Strait of Hormuz. This is bullish sentiment for oil and we are seeing it moving up. And after some talks, as I said, from the US president, he said that he sees that the war will be ending soon. It's almost over. In addition to that, several countries are just negotiating right now to use the reserves. That's why oil is dropping. So I will be marking this level, a very important level. Okay. This is an important level on oil. We can see reaching around the 85. We broke higher, we retested, then we moved up. So the first scenario I would like to see on Brent is the following. And also I will be marking this level here as well. The first scenario I would like to see on Brent is the following. Let me fix this one. Put it in green. Okay, all good. In case price went down and retest again the 85 to 86 approximate, we're going to put it at the 86. In case price moves down and retest the 86 and fails to break below this level, I will be looking for the following price action, keeping in mind that the 94 is a very important area. In case we broke higher, my next area of interest will be these candle highs here at the 100. And the 100, it's not only an important level, it is a psychological level as well. So keep in mind this level like this. This is the first scenario I would like to see on oil, or in case we just moved higher, we didn't retest this area and we started breaking above the 94.3, I believe we could be retesting once again the 100. With additional fear in the market, with additional escalations, we could be moving much faster. We could be even during the market open, we could be gapping up. So in case we have additional fear and we are able to break above the 100, my next target will be here at these candle highs at the 108. We are taking it level by level due to the very big volatility oil is moving. It's not, as you know, it's not moving based on a report or economic data. It's moving based on headlines. So one headline could be moving oil prices hundreds of pips in a matter of minutes or seconds. That's why you should be very careful whenever you're trading crude oil. The last scenario for me is this level. What if we broke lower? Well, breaking lower, if I see that the price is breaking below the 86, my next target and the next area of interest will be the 79.5 to 80. Reaching this level, I will be monitoring the price action at these candle lows here. If in case I see any signs of rejection, I will be looking for the following price movement like this. So a couple of areas of interest to summarize it on oil. We have the 95, the 100, the 109 as well. And in case we are able to break below the 86, my next target could be the 79. That's it for me on oil. Other than that, in the middle of the range, I won't be trading and I won't be looking at the price due to the volatility and ups and down movement. Let's have a look on the US 30 and see what is going on. Okay, regarding US 30, first let's draw together the areas of interest we will be looking at. This is a very important area, as you can see. In case price was able to retest this area, it will be very interesting. In addition to that, I will be looking at these candle highs here. And as well, I will be looking at these lows here. The main thing putting negative pressure on US equities is the increase in oil prices. The increase in oil prices, as I said, is giving a signal that inflation could be moving up. And based on this, the rate cut expectations is moving. Looking at the rate cut expectations, previously we were expecting between 2 to 3 rate cuts during 2026, starting from June. Right now, we are expecting 1 rate cut, and now it moved to July. Previously, it was September. Now, the next rate cut is expecting 1 rate cut at July. So, of course, these percentages are subject to change with all the economic data or any geopolitical tension or headline. This percentage will change. Regarding the US 30, in case I see that the price will be retesting once again the 48 level, but there is no clear evidence or an intraday candle closing above this level, just something like this, I will be looking for the following price action with once again retesting the 46,500 approximately. Keeping in mind that for the continuation, I want to see price breaking below this level, below the 47,500. So to adjust it more realistic, I was saying in case we retest higher, fail to break, I would like to see the following price action in case we want to go down once again to the 46,500. Reaching the 46,500, also monitor the price action, look at the candles. If I see any sign of reversal or any technical formation indicating reversal, we could have the following price action once again, or which is more favorable for me, in case we are able to break below the 46,300, my next target could be here at these candle lows, and it is a very nice area and a strong area as well. Several times it was retested and price failing to break lower, the 46,000 or the 45,800. In case we reach this level, monitor the price action. Anything similar to here, we could see the following, like this, at least testing these candle highs, and with additional continuation, we could be breaking higher like this. So these are the scenarios as well that I would like to see on US 30. This is a more favorable area for me, but we will see how the price action will develop during the upcoming sessions or the upcoming days. Finally, let's move on to gold. Before moving on and making our analysis, if you like our content, don't forget to leave us a like, follow and subscribe. If you want us to analyze any currency pair, you can type for us in the comment section and we can do the analysis together. So this was our last analysis on gold. We had several areas of interest which are actually still holding. Unfortunately, whenever we made our analysis, we were here at the 5090 approximate. I wanted to see a retest of the 5000 flat. Price didn't reach this level, it reached around 5015 and then pushed up. So let's delete these lines. The areas I believe will still be the same, but let's make some adjustments. Okay, scenario number 1 on gold. I would like to see price again retesting the 5000 in case I see sellers exhaustion, unable to break lower, candles failing, intraday candles failing to close below this level. This could be an indicator that we could have some movement like this to the left and we could be moving up once again, at least targeting a range. It's a very nice range. It's around a $200, $180 range, so it is good for scalpers and day traders as well. Scenario number 2, in case we are able to break above these candle highs, my next target will be the 5240 approximately. And here I will monitor the price action. Even though in general, during the geopolitical tensions, the safe haven, which is gold, is bullish, but currently it's facing some downside pressure due to dollar strength. That's why we are not seeing gold movement, gold just moving up. In addition to that, keep in mind that before the geopolitical tensions took place, gold was already pricing in these tensions. That's why we saw some profit taking, we saw some dollar strength having negative pressure on gold, and we retested the 5000 again. So the scenario that I was talking about, in case we broke above the 5200, the next target I will be looking at is around the 5240 to 50. Here I would monitor the price action. Maybe we can see it on the 30-minute clean. Yes, in case I see some candle formation like this, I will monitor candles failing to break above this level. In this case, I will look for the following price action, more importantly, breaking again below this level, and I believe we could be retesting again the 5000. So this is a level I will monitor for any profit-taking move. And finally, what if the price action was bullish, dollar weakness, gold strength, and we broke above the 5250? In this case, if I see bullish candles just closing above this level, the next candle making a lower wick, my target will be here, the 5330, and these are the levels I'm currently monitoring on gold. So to summarize it on gold as well, we have the important level 5200, the 5000, and here the 5240 to 250. I will monitor it for rejection and the move down. Okay guys, so that's it for our analysis for today. Hopefully you enjoyed it and we will see you soon. Thank you so much for joining.